Hey folks, welcome to Thursday, the 14th of April 2022. I had a couple of days off the desk, but glad and happy to be back today. So, what we're seeing is just a little bit of weakness across equities this morning on the slate for today. Quite a bit of data coming across the bow at half one out of the US and Europe. So, we're going to get core retail sales. We're going to get initial jobless claims and retail sales, all tier one data events at half one. And we're going to get the ECB press conference. Christine Lagarde taking the podium there, and we're going to be hearing about the ECB's plans, which are expected to accelerate the withdrawal of stimulus and maybe give us an indication on where they are with the scheduling for rate hikes later on this year. Currently, the base case scenario is the rate hikes will be kind of coming in at the very end of the year. But, is there going to be word of that accelerating and being pulled forward? So, a couple of things on the slate today really to be looking out for. Half one, a lot of volatility to be expected in these markets. And again, then at 3 o'clock, we're going to be getting Michigan consumer expectations and sentiment, and then retail inventories, and then nat gas at half three. So, nat gas storage. Anyway, let's get over and have a look at what we have on the charts here. So you're seeing just the DAX really kind of trading largely within its APAC range here in yellow. SPOOs also samesies over here, and the Dow pretty much similar activity. So, we're going to move over onto the NASDAQ now as we look towards the US session. And quite the volatility below this line in the sand that we had. So you can see here, this line in the sand kind of coming in as the top of the area is the low of the 19th of July 21, and the bottom of this line in the sand is the low of the 4th of October 21. And, as I was saying on Monday, it took a lot for us to get below this area here on the first instance, really, and horrible trading conditions here. Just see such a huge breadth in the market at this area. And then finally getting under and selling down quite handsomely to like 14045s. So now, for example, we have to reclaim, not only that kind of prior low area here, but the bottom of the line in the sand, which will be acting as resistance, and quite staunch resistance, I would imagine, given the level of support that we had in this area. So zipping back to the daily chart here, you can see, that 100 crossing below the 200 was really the big old catalyst for a lot of this downside we've seen over the last kind of, let's say, 8 trading sessions. The 50 EMA acting as a resistance above. I'm actually going to hide that now. We don't need that anymore for now. So, we may try and get back up here, but it has a lot of work to do. The bulls have a lot of work to do right now, and I certainly wouldn't feel too rosy about getting super deep long this market at this time for even a medium or short term trade. So major supports on the lows are these multiple highs, kind of a 4 or 5 tap high here, starting in April 21. 14045 is going to be the downside supports should we continue to fall down this morning, although we are quite elevated. We are up, actually we're trading flat right now on the NASDAQ. Okay, moving on to the SPOOs here. I have a more of a sight of a short here on the SPOOs, given the resistance on the 44.56 3/4, confluent with the 100 daily moving average or exponential daily moving average. Looking for a target 44.10s and a quarter on the downside, and actually we may extend those losses to 43.60s, and that's going to be about a little over 1% down from where we trade now. It's actually 1.8% from where we trade right now, which is pretty much flat on the session. Should we trade down there on the day? So looking at the short side targets for now on the SPOOs. The Dow, a little bit more quality to be found as always in the Dow. Moving over onto the daily here, we're gonna got this downward compression. I'm gonna actually take that trend off for now, but really, and actually, I'll look at this on a weekly bar to kind of show you a bit more clarity. So, basically, we're quite weak below what was the high of the week of the 10th of May 21 here. So that's 34,573s, and getting a little bit of support here from the high of the week of the 22nd of Feb, but not much, and it's really not the cleanest of levels. I mean, here you're obviously seeing some supports on the week so far, 34,031s. Um, there is a line in the sand on this, which is a little more, a little more tradable, I would imagine. 34,354 is high to 34,126 is low, and you can see that it has come in generally quite well as a line in the sand. It goes back a number of weeks now, but 34,031s. If I just kind of cut this off here, you can see that 34,031s is really that ultimate support area on the downside. But currently this morning, seeing 34,573's resistance there, and that is that sort of May 10th 21 week high. So can we push lower in this market to the 100 over the next couple of weeks? I think we can, and then by midsummer, I think we may be able to rally. But let's put the rally aside for now, and I think medium term trend is kind of skewed to sideways to the downside, sideways to down. I wouldn't say sideways to up right now, but kind of sideways to down. So quite tricky conditions, I have to say. Not probably not the greatest time to be trading equities. Looking across to oil here as well, on the daily. Yeah, I mean, look, I've been off the desk for 2 days. We have rallied quite well from what was this, like, now 92s down here on Monday. So Reed filling me in this morning on Putin comments here, really driving this market back up. Some comments this morning saying oil is destined to head off $73 to the downside. We're in now a period of demand destruction. I don't see that. I do respect the call. I'm trying to digest where they're seeing that. Why $73 down? But I just can't reconcile that at the moment on this market. It's as strong as an ox, if you ask me. I think if we were to retest down into 100 EMA 89s down here, you're just going to have a wall of buyers who are loving that price. I would say with this level of risk, this war is not going away anytime soon. There's demand destruction in China and broader across Asia with lockdowns, but those lockdowns are now softening out. I think China, if anything, if the Chinese love anything, it's lower oil prices, and they're going to be loading up the boats here, with anything like in the 80s or 90 handles. So look, for now, I think we are actually weak below 104.69. We've seen that. It's a big level for me to be trading. If we go back on the dailies, I don't know if I show that clearly on these daily charts. It's quite an old level. If we go back on a monthly picture, maybe, no, that's not going to do us any favors. But I have talked about this 104.69s before in the past. So it's a big level. You've seen resistance there majorly on the 5th of April this year so far. So, it'd be interesting for me to see, can we put the market above there again? I think it's going to be hard for the buyers to push that level. So I think we can stay in a range from like 99s to 104s for the next probably week, maybe. Let's see. But quite reserved about making any major calls on any of these markets at the moment. The dollar, the dollar's had a little spin of weakness after what has been a phenomenal couple of months for actually probably phenomenal year and a half for the dollar, to be honest. But it is a risk product. You got to be long the dollar when there's rockets being fired on European soil. So yeah, look, we've hit target up here so far. So this is on my charts for a long time. 2015 high double tapped again in this area, 100 spot 38. That's kind of target achieved. Yeah, we're going to roll back, test this whole line in the sand as support now. Okay, as support, general support, and then I think we can move on to this general downtrend up here that you can see, that kind of brings into play the highs of 2017 and the highs of 2020. And I think that's just being long the dollar is just the prudent trade right now. And so with that, it's very hard to get a decent trade on the euro. So yeah, gold. I think gold is a very, very tricky trade. I suppose I'll share one thesis I have. I haven't really been in love with gold for the last while, but weekly, I'm starting to see they're actually, given this recent high that we've had in May, I'm actually starting to see there's this massive bull flag channel here. So yeah, it's huge, but I think, should we trade into the 2080s, I would be looking for a long-term short to pull down back into this channel. So, I'm still working on a thesis on that at the moment. So let's see how she goes. All right, that is it for me for another pre-US session. Please do click the link to subscribe and like. And guys and girls, see you during the US session. Cheers.